This is Haystack Help Radio on KLZ 560. Haystack Help Radio is powered by HaystackHelp.com. Finding help can be like finding a needle in a haystack, but with HaystackHelp.com, finding the needle just got easier. Now, Haystack Help Radio with Scott Watley on KLZ 560.
Good afternoon and welcome to Haystack Help Radio. Thank you so much for joining us today. Be sure and check out our website, HaystackHelp.com. There you'll find a lot of great companies to do business with. And one of those great companies is Affordable Interest Mortgage. Mr. Kurt Rogers joins us in studio for a special edition of Your Money Matters.
Good afternoon to you.
How are you, sir?
How's it going so far this year?
You know, so far so good. I just can't believe it's April. Man,
what happened the first 3 months?
I'm telling you, it is just seems like Happy New Year, boom, April.
You know, when I see people not quite as excited about spring this year because our winter wasn't very tough. It's like we're almost like it never happened and people aren't getting that built up. I know everybody wants to get out, but they're not that excitement.
Yeah, right.
Like there normally is because we haven't had enough snow.
No, I mean, I don't know what the totals or the lack thereof is, but I think we're pretty far behind for snow. So.
Yeah, the last couple of years we've done pretty good.
Yeah.
I'm not looking forward to the fire season, but yeah.
Absolutely. Well, again, it's a special edition of Your Money Matters right here on Haystack Help Radio, brought to you by Affordable Interest Mortgage. And we'll get to our guest here in a minute. Greg Lackey is going to be with us. We're going to be talking a little bit about insurance today. But first of all, Kurt, let's kick off a little bit about you and your company. And let's talk about some special maybe programs that you may have for some low down payment programs.
A lot of people you'll see advertise down payment assistance programs. Well, they're out there, but there's actually some programs out now that require low down. There's several loan programs, for example, USDA or VA, that you require no money down. They've been out for a long time and they're just built that way. There's other programs out that they have that require 1% down, or you can do a program called a Home Ready and have a 620 score, and they'll actually do 97% loan to value, and the seller can gift the 3%, or anybody else can gift the 3%. So it's actually a no money, a low down kind of program because it's designed to get people in. We're seeing a lot of people starting to take advantage of those, and most of those come without mortgage insurance. If you want to pay it, you can. If you don't want to pay it, you don't have to. So it gives you the option of how you want to structure the loan around what you want to buy. And the whole goal is to make more homes more affordable to people. You know, the $250,000 to $300,000 range.
Right. Do you find a lot of clients that call you, especially those that don't know you for the first time, and you start asking all these questions? I mean, they probably get a better interview from you than they will, anywhere else at a bank, whatever, because you're really trying to find the right loan for them, and you've got so many options where a bank may say, not ask too many questions because they've only got 2 or 3 deals to throw at them, right?
When you go to a local bank, you got to understand you're dealing with the parameters that bank does because it's their money. So they're very restricted on what they can do. Brokers like myself, we shop around to find the right program. And depending on what the market is doing is depending on those programs we want to find. So yes, you are correct. I'm going to ask a few more questions because I want to make sure the loan program that you get is the one that fits you the best. It might not fit your neighbor, but it fits you. So it's a little bit more personalized. And that's where we're seeing a lot of people want to put very little money down, or maybe 3 or 5%, and get into something. And that can be done pretty easily anymore.
And what are you seeing for rates right now?
They're actually staying pretty steady. We had a big movement about 3 months ago. They went from mid to upper 3s, and now they're in the low 4s. I think they'll stay there, but I honestly believe by the end of the year, and I said this at the beginning of January, you'll see 5% by the end of this year. And it's going to change. It's going to affect home values a little bit. It's going to settle. We're starting to see that in high-dollar homes are not appreciating. They're starting to settle. Mm-hmm. Certain areas are starting to settle. It's not a bad thing. It's just that you don't have as many buyers, per se, in those ranges because of what's happening with the rates. It's affecting the payment.
Right.
A quarter of a point affects your payment about $70 a month. So some people are willing, some people aren't. So those are just things that are out there. That's why looking at different loan programs to fit your budget sometimes make a big difference.
Absolutely. And Kurt and his crew will help you out. Give them a call, 720-895-0500. The website is aimortgage.net. Well, welcome back. It's been several weeks, Mr. Greg Lackey. How are you, sir?
Doing well, Scott. Thanks.
Good to see you. So, wow, you guys have kind of been out of the news lately. I mean, man, you hadn't heard much about it, healthcare and all that. A lot of other stuff going on with Trump and all the people after him. So,
yeah, they're always after him.
Oh, my goodness. Yeah. But let's talk a little bit we'll talk a little about maybe different types of insurance today, but let's talk a little bit just about where things are as we sit here today now, Greg, with healthcare.
Well, your guess might be as good as mine, but I would imagine, come the fall, this will, really, really heat up again, especially with the midterm elections in November. So, as we go through the summer, it is kind of what it is right now. The only real, I guess, some of the changes, or they shouldn't call them changes, was, when we've talked about it so often in this program, was the subsidy programs that the government, providing money to the insurance carriers to offset the cost in subsidies that are granted to people that, fall below the 400% FPL. So that didn't happen. So I think it'll be interesting, again, as we get into the fall, what that's going to do to the rates. Right.
Again, Greg is with Accelerated Insurance Group. And his number is 303-625-9538. If you have any questions, of course, our lines are open, 303-477-5600, or comments about insurance as well.
Now, we had talked before about the elimination of the mandate. When does that all start to take effect?
That doesn't actually happen until 2019. Okay. Where the individual mandate goes away. And, again, there's been a lot of banter in the media about, how does that going to affect rates. Obviously, if you're not forcing healthy people into the pool, then they're no longer required or not going to get taxed for not having health insurance. What does that do, to future rates? Personally, I think it's minimal. I think people that want to buy health insurance are going to continue to buy health insurance. The people that, that didn't want to buy insurance and maybe bought it because of the mandate, I think that was very few. I think a lot of those people were paying the tax anyway because, again, the tax was so minimal.
Yeah, and basically I did that. There was a year that I went with no insurance, that. I have found a different way, Medishare. I really like Medishare. I've used it a couple times. It is not insurance, but the way they take care of my visits with the doctors, and it's much more reasonable for me, and I don't have to deal with this mandate now because I'm really okay with that. I like that program. There was an article that came out earlier today that states are now starting to change the way they look at doing things. Iowa just passed a law. Kind of explain what they're looking at there.
Yeah, and again, let's talk Medishare first. I mean, Medishare is it's a religious organization, and there's several of religious organization, and again, they're not called insurance companies in order to get around the DOI that exist today. I think there's like 7 of them. We work with Medishare at our company, and the reason being was because they're the one company that, that there's an ID card that you have, very similar to your insurance card,
yes,
that you go in and present to your provider. And then also when it comes to the billing, they're negotiating with the provider on contract pricing, and they're handling all that. Some of the other ministry programs out there don't do that. All these are still fine, but I just felt like that Medishare acted more like what you're accustomed to. And to your point, Kurt, I mean they've been fantastic. I mean I've moved to them. Yep. I had a knee done here in January, and they still have a PPO network. And
that's really nice.
And just outstanding. I mean, I've been so impressed with how the billing has been handled and the communication. I'm with you. I think it's been great.
So get into look, because I think a lot of people, they talk about it, and you'll hear some people that don't like things, and sometimes because if they don't like it, it's because they don't offer it.
Right, right.
I've learned that. So talk about maybe 2 or 3 of the positives of it, and then if there is a negative side that it's not for everybody, and maybe I don't know if you would say that or not, it's not for everybody out there. What are some of the possibilities of the downside?
Yeah, I mean, I think the first thing that obviously comes to mind why people like it is the price.
Yes.
For an example, like my wife and I mean, it's $1,000 a month savings versus what we would have paid, with the ACA plans. So, anyone in that, late 50s, early 60s, where you're getting into, $1,500, $1,800, $2,000 a month in premium, you're going to cut that down, probably in close to, in the fives or 600.
Yeah,
So,
mine's underneath it. It's $435.
Right. So if you have a deductible, like I know Kurt does, and hope you don't mind us saying this, like at 5,000, you're on the hook for the first 5,000, and then they step in. You're right, though; it's not for everyone, and we've struggled with it a little bit as a broker, just because I never want to, pry into someone religious, because to me that's all personal.
Sure.
But there are questions that are asked, pertaining to your faith. The other thing too is those policies are they're medically underwritten. So pre-existing conditions are going to have waivers. They act just kind of like the plans prior to the ACA.
Yes.
They're not going to cover drugs. When I say cover drugs, I mean if you are a drug offender or alcohol, anything related to that, they're going to deny coverage on that. So
there's an exam before you can.
There's an exam, and people will say, "Well, gosh, how should I answer that?" And like any religious thing, you answer truthfully.
And it's not that they don't cover everything, but like you said, it kind of goes back to before the ACA, in that they want you to take on a little responsibility of taking care of yourself. Like, like they mentioned to me, they said, you need to be careful because you could be a little overweight here. Pay attention, and this is what happens. So I have to accept some of the responsibility if I want to control some of my fees. And I actually like that, instead of just saying, okay, I'll throw you a whole bunch of money and I can do whatever I want.
What I like about it is that there's a lot of like-minded people that are in this pool, which gives me confidence moving forward that when it comes time for claims, that they really are trying to have the best interest of everyone in that pool. And also by signing off on, some of the requirements, like I said, your commitment to your faith and that being an example, I just, I think it's pretty well controlled. It again is when they look at that pool of people and what they're paying out and so forth. I'll give you an example. And I was just reading through my booklet the other day, and I noticed that, if you're riding on a motorcycle and you don't have a helmet on, and there's an accident, they're going to look at that and go, "You were negligent."
Yes.
Seatbelts. They're going to look at that and go, "You're negligent." So, you can say, well, that's not fair. Well, it might not be, but that's kind of how they do things. And if you want that rate, then
follow their guidelines.
Follow their guidelines.
Take some responsibility.
It becomes pretty clear.
Yeah, it does. And I actually think it's a very good thing. And you said it earlier. We're all like-minded. We all understand that, so we all understand we're protecting each other in that deal.
Correct. And they've been in business since '93. So it's not like that they're just new to the scene. Where they've really gained popularity is probably in the last few years. And again, a lot of that's just due to the ACA, and people are trying to find other options.
My price went down over 60%.
Yeah,
so I was ecstatic.
They're looking for other options.
And like I say, I think people out there just wonder more about it. So you go, do you pay the off? Do you get reimbursed from this deal? Does the bill go to them like a normal insurance company? They pay it? How does it work?
I've gone into a doctor. I was telling Greg before we came on the show, I'm not fond of doctors. And I got one. I don't want to get sick, but the next time I need to go in, I'm going to go in and see him because I like him so well. But I went in the first time. I spent 20, 25 minutes. We talked. He said goodbye. I came back. They did their stuff. I still haven't seen a bill. I've seen ideas, but nothing's come to me and said, hey, here's your share of what you have to pay. And from what I'm seeing, it's quite nominal. I said, well, just let me know. I'll write that check, and that'll be part of my $5,000. So it's a very that you walk through the process and you get to see everything. They're very transparent.
Is it a network of doctors, or you can go who do you want?
PPO. I get to go who I want. And I found one, and he's just wonderful.
And it's the doctors, just like on any insurance company. There's doctors out there that are not within their network. But with the PPO network, what that really means is that you don't have to go to a general physician in order to go get a referral to go to a specialist. Right. You can go directly to that specialist. That's really what a PPO is saying. It's a preferred provider organization. But no, the list of doctors that accept MediShare, I found, is it's outstanding.
And the doctor I asked him about it when I sat down. He said, we really like MediShare.
And the other thing too,
it's a good company.
The other thing too that that we fail to mention sometimes is with MediShare, if you're traveling different states, I'll give you a perfect example. I have a customer out in eastern Colorado that just recently was on her way to California, and she had a horse trailer, and she stopped in Gallup, New Mexico, and was tending to the horses, and one of the horses kicked her, and she went into the emergency room there, and they said, when you get to San Diego, go see a doctor. Well, she's with Blue Cross, and there's been a problem in finding a doctor. And so, those kind of examples with contract pricing and people not necessarily understanding how networks work, this is something with MediShare that, she would have been in a much better shape had she gone in that direction.
Yes, very much.
Wow. You're listening to Haystack Help Radio, a special edition of Your Money Matters, brought to you by Affordable Interest Mortgage. Greg Lackey is our guest with Accelerated Insurance Group. If you've got any comments or questions, our lines are open, 303-477-5600.
What could you do with an extra $500, $1,000, or even $1,500 per month? How would that change things for you? Would you buy a new car, pay off bills, or just feel a bit more secure about your retirement? What if I told you there's a way to make your dreams a reality? I'm talking about trading and investing in the market. Now, before you say, oh, that's not for me, just hear me out. I want to invite you to a half-day trading course so you can check this out. I promise you, you'll go away smarter than when you came in. We here at Online Trading Academy sponsor this, and we'll even send you home with a free home study video guide. Your money's doing nothing for you in a CD or mutual fund. Learn how to profit when the market's up or down. Call us now while seats are still available at 303-325-2776. Use offer code RADIO50. 303-325-2776. That's 303-325-2776.
Affordable Interest Mortgage has been your personal mortgage broker serving Coloradans since 2001. Take aim if you're tired of being forgotten, disrespected, and not listened to when applying for a mortgage, or do you feel like you just talked to a call center and you never get the same person twice? Take aim, 720-895-0500. Our rates are still great, with loans designed to fit what you want, not the bank. Experienced professional loan officers to expedite the process and close quickly. We offer paperless applications, or we will come to you. View your loan status 24/7 and get rid of high-cost mortgage insurance or credit card debt to save hundreds now. Take AIM, 720-895-0500. Many of our clients are saving thousands in excess mortgage payments, owning their home faster, all without changing their spending habits. Call now to start saving big. 720-895-0500. Talk with the same loan officer from start to finish, where it is all about you. 720-895-0500. Regulated by DOR, NMLS 298191, Equal Credit Lender.
Lone Tree Veterinary Medical Center offers KLZ listeners complete pet care services every day, all at one location. It's so much more than a clinic and so convenient. Their expert staff is always happy to help your pet have the happy and healthy life it deserves. Schedule a medical checkup for your beloved companion, or take the first step toward a better behaved buddy by signing your pup up for obedience training. Did you know that if your sweet kitty needs grooming, Lone Tree Veterinary Medical Center is one of the few facilities that offers grooming for both dogs and cats. And if you're planning a vacation, Lone Tree Veterinary Medical Center offers boarding for dogs, cats, and other small pets, so you can take your vacation without worry, knowing that your four-legged family member's home away from home has a fully equipped medical center on site. Learn more about Lone Tree Veterinary Medical Center at lonetreevet.com or call 303-708-8050.
Rush to Reason with John Rush, weekdays from 3 to 7 on KLZ 560.
And we are back. You're listening to Haystack Help Radio. My name is Scott Watley, along with Kurt Rogers from Affordable Interest Mortgage. Greg Lackey, our special guest today, Accelerated Insurance Group, talking about our lovely health care.
We were talking about Medishare before the break, and one of the advantages, like this lady went to California, and it's kind of ironic. My wife received a letter yesterday that she has her own. She's not with Medishare. She has her own with the Obamacare program, and she's paying close to $900. And she got a letter that the clinic that she went to is no longer associated with her insurance carrier. Neither are either one of the two doctors that she has, and she is right in the middle of a lot of different tests. Now, I don't know what I can do for her at this time, but she is kind of stuck in, we got other things in life we're trying to do. She's trying to get, now all of a sudden she's got to go back out and start this whole process over to find out doctors she's comfortable with to get back into the system and to find out where she's at. And she is not a happy camper.
So if you like your doctor, you can keep it.
Yeah, we need to have that on a cue here.
We lost not only the clinic, but both doctors.
You know, one of the challenges, you know, for a lot of these insurance companies, with the exception of Kaiser, Kaiser, who your doctors are going to be unless they leave Kaiser, has been contracts. And that these contracts between the insurance companies and the providers can change at any time. So, your wife's example back in December when she was trying to make a decision on the carrier had everything to do with the clinic and the doctors that she wanted to have access.
That is the reason she chose them, and she chose not to go. She said, I don't want to do this. I'll stay here.
Which is, which we find quite often.
Yes.
Well, then all of a sudden there's a dispute in the contract, and I'm not sure who to blame. If you call the provider, they'll say, well, it's the insurance company. You call the insurance company, they'll say it's the provider. So who knows? However, what we do know is they're no longer accepting the insurance, and you now have to find another doctor.
Yeah.
And it's just one of the many challenges with the ACA. And, the other challenge that's going to happen, and again, with the midterm elections in November, and what you're seeing is, the stuff that I read is a lot of shift where they're trying to pin the Republicans with the responsibility of Obamacare because they didn't get it, rectified when Trump got elected. And now they're using some of these examples about, like the insurance companies no longer to get the subsidy dollars, or the stabilization bill didn't go through. They say, well, that the window of the enrollment period has shortened because of Trump. That's not true. That was done years ago.
Well, everything's
but everything is going towards him and the Republicans come November. Again, you get back to the Medishare. You get back to what Iowa just did yesterday. Idaho also is looking at this from a statewide organization. Tennessee, they're looking at options. And what I think you're going to see happen is the healthy risk is going to peel off and go to the Medishares or go to short-term plans.
Explain what they did in Iowa that we were reading about this morning.
In Iowa, what happened, and just went into law yesterday, again, Farm Bureau there is going to offer a health insurance plan. The insurance plan they're offering, is not called insurance.
It's not insurance.
Sound familiar?
Yeah.
And really what they're doing is they're stripping out the mandated benefits that we were told that were so important. Well, some of those benefits are important to some people, just not important to everyone.
Right.
And so when they strip that out, then the insurance and then those policies can be underwritten also in Iowa. The cost of that, similar to Medishare, is going to be much, much less. So there will be an option for the people in Iowa.
Which means the people that are more healthy, more responsible.
Right. And so, this is where this thing gets scary because now they're going to peel off. Well, what's going to happen is the people who are not as fortunate with their health and do not get their insurance through an employer are going to be forced into the marketplace. Well, that's going to become the high-risk pool.
Yeah, cost a whole lot more.
And we had a high-risk pool prior to the ACA. And those plans back then were much less than what we're going to see. So like I said, come fall, this subject will really heat up.
Up to number one.
Because, insurance companies are going to release their rates. Like Medica in Iowa, I think, is the only carrier left there. Well, they're upset that the legislature in Iowa has pushed this law through, because obviously they're looking at it going, well, we're going to lose what healthy risk we have.
Yeah.
And we're going to be left with all the unhealthy, and how do they stay in business?
So our revenue coming in will be less than our revenue going out.
Absolutely.
And really, this thing with doctors leaving networks, hospitals leaving networks, clinics leaving networks, we're probably just getting on the tip of the iceberg of that, right? I mean, that's probably going to happen more and more.
It could. I mean, I think you're going to just see, fewer carriers. Now, again, I get back to Kaiser in the state of Colorado. They have a pretty good political baseball bat, too, that they play with. So, that's the one thing here we're guaranteed to have. Mm-hmm. Bright Health is competing against them. So, and whenever you can create competition, obviously, hopefully you can lower price. But if all the healthy people
right.
are saying that do not get their insurance through their work, or as we talked about, if they peel off and go elsewhere, they're still left with the same problem.
Now, with the election coming up, with the midterms that we're talking about, do you think that the Democrats will come back again hard with the one-payer system?
Absolutely.
Even with all this other stuff going, you still think that?
Yeah, I really do. And I think that will be interesting with the Democratic Party. Is even Mrs. Clinton, she didn't want necessarily to go down that one. She didn't want to go out and really talk about the one-payer system like Bernie Sanders did.
Right.
And I think in the Democratic Party, they're kind of struggling with, do we really want to run on that issue?
Yeah.
Because the truth of the matter, we're seeing in California already. California's trying hard to move that state to a one-payer system. And even the governor, Jerry Brown, there has said it's just not feasible financially. Yeah. So even he recognizes it.
It's not going to work.
It's not going to work. So from financially, how do you pay for it? But like I said, it'll be very, very interesting come November, if they decide that we're going to run on it.
There actually has been a state that tried this in the past, and it was so bad for them that they had to change it quickly before the whole state went bankrupt because of the cost of it, what they said it was going to be versus what it is.
Always sounds good.
Yeah. It depends on who's doing the math.
Until you dig into the details.
You mentioned Bright Health. How does a company, and they're relatively new, mm-hmm. right? How does a company like that come in and seem to be doing well, and then some of the, what we'll quote, bigger players, the Aetna, whatever, some of those decide to leave? So, how does that work? Well,
in the hospitals, there's buying organizations, okay? And so you take like Bright Health, what they did was they partnered with Centura. And Centura has X amount of facilities here in Colorado. So Centura can kind of hold their pricing with their vendors.
Gotcha.
Because they're just much smaller. If you've got, 10 people in a room, it's a lot easier to get them on the same page than if you've got 50. So when you kind of cut down the number of providers and say, okay, when we go out and buy product X, we're going to offer that product X to all of our Centura facilities, and we're going to tell the manufacturer we're only going to pay X amount of dollars for it. And if you want to get into this facility, you're going to meet our demands because we have this amount of patients. Well, Bright Health, the insurance company, looks at there and goes, gosh, we like, the way that's set up. It's much like Kaiser.
Right.
Yeah.
Kaiser works like that. It's just controlled. And what people always forget in all of this is when you go into the facility, you are getting something made by someone. And there's a cost attached to it. It's just not magic.
Right. I have a friend getting surgery as we speak right now on his back. They told him he would be in the hospital 23 hours.
Yeah,
not 22, not 24.
But before 24 hours, he's leaving. It's an outpatient type deal for back surgery.
No, again, I know down at Sky Ridge as an example, Lone Tree golf course, the hotel over there.
Mm-hmm.
That's kind of become a place for people to come in and get knee and hip surgery from out of state or outside Denver for a place to stay. So they go there for to the hospital for a short period of time, then boom, over there. Now they have access to the doctor until they can be released and so forth. It's a great way to save cost.
Wow. You're listening to Haystack Help Radio in a special edition of Your Money Matters. Greg Lackey's our guest with Accelerated Insurance Group. Again, Greg's number, 303-625-9538. We got to take a short break, and we'll be back with more right after this.
Littleton Heating and Air Conditioning is proud of their 45 years of HVAC service to Littleton, Highlands Ranch, and Denver metro area. Littleton Heating and Air Conditioning is your Lennox and Carrier expert heating and air conditioning contractor. They are proud to offer the finest heating, air conditioning, and indoor air quality products with prompt and professional customer service and satisfaction. Call today and mention Haystack Help Radio and save $25 off any repairs or $100 off your furnace installation. Call 303-798-3880. That's 303-798-3880 for your appointment today. Littleton Heating and Air, A-plus members of the Better Business Bureau and official Haystack Help registered company.
Ladies, I know you're tired of walking into the local gun store and seeing the same old thing. So let me tell you about Rampart Firearms. Just a quarter mile up Highway 67 off of Santa Fe and Sedalia, you will find a great selection of guns, ammo, tactical, and personal defense weapons. And if you or your spouse love to hunt, Rampart Firearms is a great stop for all of your hunting needs. Shotguns, rifles, pistols, anything from predator hunting to your next big game trip. Head to Rampart Firearms at the foot of the Rockies. Open 6 days a week, Monday through Saturday, 10 a.m. to 7 p.m. And you will only pay a 4% tax on your purchase. RampartFirearms.com, 720-468-0050. That's 720-468-0050.
I was hurt in a car accident. The bills were piling up and my insurance company was giving me the runaround. I didn't know what to do, but then I called a lawyer I saw on TV. That lawyer had all the tools and the knowledge to get me $1.2 million.
Whoa. When you're hurt in an accident, you need Kevin Flesh of Flesh Law, a lawyer that's going to take your case seriously and not treat you like some get-rich-quick scheme. Serious car accidents are traumatic and can completely disrupt your life. Kevin Flesh has the integrity to help you get your life back on track. He will fight for you to get what you deserve, but he won't treat you like a lottery ticket. After you've been in an accident, call Kevin Flesh of Flesh Law at 303-806-8886 and make sure you will get someone who will do the right thing and get your life back.
Don't fall for gimmick ads when choosing your insurance coverage. Group Insurance Analyst has been Colorado's insurance superstore since 1984, where customers can compare and shop for all of their insurance needs. At GIA Insurance, their brokers have no allegiance to any particular health, auto, or home insurance company. Take advantage of their experience, expertise, and exceptional client service. For your free quote, call today at 303-423-0162. That's 303-423-0162. Visit their website, e-gia.com, or stop by their office at 44th and Garrison Street in Wheat Ridge. Group Insurance Analyst is an official Haystack Help registered company.
Got a question for the station? Email info@crawfordbroadcasting.com. Now back to Haystack Help Radio.
Welcome back to Haystack Help Radio, special edition of Your Money Matters. Kurt Rogers in studio with us from Affordable Interest Mortgage. Once again, if you got any mortgage needs, give Kurt and his crew a call, 720-895-0500. Greg Lackey is our guest with Accelerated Insurance Group. So, Greg, switching over to auto real quick. Quick story. Got a gentleman in my church. Got into an accident. The person that hit him had a $25,000 policy limit. He had $100,000 on uninsured, underinsured. His medical bills are about $400,000. Bummer. What are you going to do? You know? So, man, I'd like to talk a little bit about just having people look at, they get nothing out of this show, get this. Look at your med pay and then your uninsured, underinsured. After that happened, we had 100 too. We called our insurance to USAA. I got $1 million for $55 more every 6 months.
Every 6?
Yeah.
Well, that's
Okay.
Yeah, liability is, to me, the most important part on an insurance policy is the liability. I mean, because of that's where the large bills can get into. You know, yeah, I'd like to fix my, $18,000 or $15,000 car.
Sure.
But am I better off spending money on a collision and comprehensive deductible, or am I better off increasing uninsured, underinsured, MedPay's cheap, or my liability limits?
Right.
And to me, liability wins that debate all the time.
But the state law requires what?
25.
50?
Yeah, minimum.
For everybody.
Yeah. The other thing too is, in your liability, I see a lot of people carrying 20, they'll carry 25, 50 and then 25 on property damage. Okay. Well, what's a new Tahoe cost?
Yeah.
What's a Camry cost?
Yeah.
Sure.
25 grand.
Right.
Well, I'm telling you, if you get a ride in a ambulance, if you need that, you get a few scans, x-rays, different things like that. That 25 grand is not going very
right.
far.
And if you're at fault,
yeah,
if you're at fault, then obviously you're on the hook.
Mm-hmm.
And that's where your liability is going to kick in.
And a lot of times, and tell me if I'm wrong, but insurance agents, they just look at the deal. Hey, we're going to give you 5,000 med pay, 100, 300, all, and they just kind of do their standard things, right? Most of the time.
Yes, we're all guilty. You hear. I'll ask a lot of people, well, what kind of coverage you have? I got full coverage.
25, 50.
Yeah.
Well, what's full coverage?
Yeah.
The full coverage can be determined a lot of different ways.
Sure.
And I think a lot of times they're just kind of looking at deductibles.
Mm-hmm.
So if they've got a deductible on their car for collision, they got a deductible for comprehensive, then they think they have full coverage. They're never looking at those liability limits.
Right. And I mean, so many of the little add-ons, for lack of a better term, are not expensive at all. I mean, you take rental, towing, some of the things that you make, they're really cheap.
Yeah, and I can, you take towing as an example. It snows. Someone's got a flat tire.
Sure.
And gosh, what a way to, be able to call the insurance company. Hey, can you send someone out here? And, for $50 or $60, not to the customer, but it's paid for through the policy.
Mm-hmm.
So, all that, those are just things where you need to have conversation with your agent.
Right.
And again, I know like Geico's are really popular, but you're talking to someone who really, they're just...
Don't be worried about saving 15 minutes. Make sure you got the coverage.
Yeah, because when it's easy to have this conversation when there's no claims or nothing has happened. Have that conversation with Geico after it's happened. And Geico's a good insurance company. I'm not here to knock them. I'm just saying that it's a little different way of going about it. I just think it's very, very important that you understand your insurance policy and how it works.
Yeah.
With the growth that Denver's gone through over the last 5 years, in counting the population versus the accident, has the insurance cost gone up per person because of that growth and more problems? I mean, is it really affecting us? I mean, there's so many people on the road now. I'm assuming there's a lot more accidents.
There was a really good article in the Denver Post back in February on auto rates in Colorado. And right now, Colorado's the third fastest rate increase of any state in the country.
So it does kind of have a correlation.
There's a lot going on with that. Obviously, we had a huge, we've had hailstorms that have just been devastating.
Yeah.
Us in Texas, lead the country in loss. So that's had a lot to do with it. You look at collision on a car as an example. It used to be you ran into someone's back bumper. That bumper, might cost $300 or $400, and that was it. Well, then all of a sudden we had these sensors put into the bumper, so when you back up, it beeps. Your car starts beeping when you get close. Well, now we've got video cameras back there, so now you can even watch, as you're driving, as you're backing up. And, anytime you started increasing the technology, those costs have gone up. So now when you run into that bumper, that's no longer a $300 or $400 bill.
It's $1,500 to $2,000.
The bill's gone up.
Yeah.
And that's from experience. And one of the biggest places that you have those kind of accidents is in parking lots. It's amazing to me. They say that 60% of all backing up accidents are done in parking lots. You're backing out and there's somebody coming down. You can't see them and they don't want to give way. 60% of all backup accidents are in parking lots.
Then the question becomes,
Costco.
Whose fault?
Yeah. Well, it's always, I've been there. I was the person backing up. I had a big van on one side. I couldn't see as I backed up. The guy went all the way as far out as he could. I got him, and I had to pay.
And you had to pay, and also your rates then get affected.
Yep.
As you move forward, and that's the other side of that. Is as long as you have clean driving record and you're free of accidents, for a period of time, you have all the leverage when it comes to shopping and so forth. It's just that when you start to
accumulate,
it can get very expensive.
Kevin Flesh, our attorney, he says this real, just another quick tip. No matter how minor the accident, if there's damage, call the cops.
Yeah.
And get documentation.
Take a picture, cell phone.
Yeah.
Oh, I did that.
Take pictures. It didn't help. Also of the driver. Okay. Now, you don't have to sit there and go, could you pose for me? But I mean, somehow, covertly, get a little casual picture. VIN number of that car. You'll be surprised. Stolen plates. Okay. VIN number of the car. Picture of their driver's license. A lot of times we'll take a pen, we'll start writing down information. Well, if it's a pretty good whack, I mean, man, your adrenaline's going and all that. You may transpose a number. So just take picture of the driver's license, picture of the driver, the VIN number of that car, all that, picture of the damage and all that. Then you can send it right to the, Mr. Flesh or whatever.
The other thing too that's driving this a little bit is, again, liability lawsuits. Costs of those have gone up. Colorado is one of the few states in the country where we don't have a moratorium on the number of ads that can be run on TV. It's really a struggle for the insurance company. As far as they used to be able to go out and look at an accident, look at skid marks. Well, now there's not even skid marks. Distracted drivers have become a very big problem. And the insurance companies are trying to figure out ways to handle that. And we're seeing them, move towards devices that you stick underneath your dashboard or, on your cell phone, depending upon who the insurance company is. And, and I think it's just more of an attempt. I know people get concerned that, someone's looking at them and where they're going and so forth. And it's not so much that as I think it's more of, hey, the insurance company is saying, if you're willing to meet me halfway, then we think you're taking this seriously, and we'll give you a discount for doing so right up front.
Same thing as Medishare.
We'll
take some of the responsibility.
They're trying to incentivize people, and people get so fearful of, well, they're going to be, then they're going to raise my rates. No, they're not going to raise your rates. They're just trying to get a little buy-in. And I carry the device on my car, and I forgot about it, that it's even there. But you do think about it. If I'm going down 70, a lot faster than I need to be, go, maybe I need to back off here a little bit.
Accepting more of the responsibility.
Exactly.
I think it was on Channel 9 last night. They were doing the survey, how they ask questions. How many of you don't use your phone? How many of you do use it? How many of you are distracted? Well, people that are saying they were distracted, well, I only look at it when I see a text, but I don't respond. Anything that takes your eyes off the road, and there were 37% of them. Now, there were, according to this survey, there were 25% of them were real honest, said, yeah, I use it all the time. Mm-hmm. But it is. It's
you
a
could
big
probably
problem.
add another 20% to that.
On top of that, yeah.
Well, the other thing, too, is in Colorado, and again, that Denver Post article, I thought they did a really, really good job of explaining, what's going on. And they said in there 16% of drivers on our roads today are not carrying insurance at all.
Right.
I've heard from the insurance industry that number is more like 20%. The next 20% are or underinsured, carrying those minimum limits. So if my math serves me correctly here, 40% of the drivers that are going down 25 or 70 or anywhere here in Colorado, and if you get hit by one of those,
you got a problem.
You got a problem.
Yep. Oh, wow. I'm telling you, pull out your policy tonight, though, and look at that MedPay, uninsured, underinsured. Let's go to the phones real quick before our break. Wally's on the line. Wally, how are you, sir?
Good. How are you, Scott?
Well, I'm doing good, bud.
So you guys were talking about MediShare. My wife and I just signed up for that. And I'm just curious. I don't know a lot of people that don't drink. And that's one of the things that you sign with MediShare is that you don't use any alcohol or tobacco products. Do you think that's an issue that people sign off on that? But, I mean, how do I say it? I guess there's no nice way to say it. Are they lying when they sign off on that? And then if there's a problem, involving alcohol, then they're going to be denied coverage?
That's correct.
Okay.
I mean, or I should say, in the insurance world, it's always gray. But yes, there would be a chance of that happening. So, Wally, if you get behind the vehicle and you've had one too many and you cause an accident, they're most likely going to deny that.
Yeah, but that
okay.
And see, I would see that, Greg, as that now you're driving while intoxicated. If you're within the limits, if you're within the limits, I would question that because, like you said, most people will drink even on an occasion. But as long as you're not abusing it, I don't know. When I answered mine,
the form I signed was pretty clear.
Correct.
You don't use any alcohol. You don't use any tobacco products.
Correct.
It wasn't on occasion. It was none. And I don't drink, so it's not a problem for me. But
I think this, Wally, the thing you got to keep in mind is that they're protecting you from others who might not tell the truth and who find themselves in one of those situations.
And I think there's a lot of people, real quick, too, and we got to hit our break, Wally, but I think there's a lot of people, too, that, they say, in their mind, they don't really drink, They have some wine, at dinner or something, but in their mind, they're not really a drinker. They're not an alcoholic.
Well, I think there's people out there that will have a glass of wine and then they won't drive.
Yeah.
If my wife and I go out, if we take her car, she'll drive there. If she has a drink, I get the keys. She doesn't even want to drive.
Mm-hmm.
So it's just you take more responsibility, and that's where it kind of comes back to MediShare. You have to accept some of the decisions you're making.
Yep. Absolutely.
Okay.
Hey, Wally, thanks for the call, bud. You're listening to Haystack Help Radio. We'll be right back.
If you're looking for great deals on outdoor equipment and clothing, we've got you covered. Hi, this is Bill Paddock, owner of the Outdoorsman's Attic, your outdoor gear consignment headquarters. You'll save 20, 30, 40, even 50% on previously owned outdoor gear for the fisherman, hunter, and camper. We also sell live bait, firearms, and ammo. If you're doing a little spring cleaning, bring in your gear to the Outdoorsman's Attic. We'll sell it for you and put cash in your pocket. You can also pick up your hunting and fishing licenses right here at the store. Your one-stop shop for all your outdoor gear needs is the Outdoorsman's Attic, located at 2650 West Hampton Avenue in Sheridan, Colorado. 303-781-3626. That's 303-781-3626. Or visit us online at outdoorsmansattic.com. Mention Sportsman's of Colorado and receive 20% off all your outdoor clothing.
Are you well positioned today with your current financial advisors? Or should you consider switching advisors? And if so, how can you find the right one? To help people like you, Dot Mechtenberg offers a free second opinion service. Let Dot help you achieve your retirement goals. Call Dot Mechtenberg today at 303-940-7807. That's 303-940-7807 or visit dotmechtenberg.com. Securities and advisory services offered through Genios Wealth Management Incorporated. Member FINRA SIPC.
Hi, this is Scott Watley. Let me tell you what I love about Stack Optical. They are truly one of the last optician-owned, family-owned optical stores. At Stack Optical, you can be confident you'll receive personal attention. For over 50 years, Alan Stack has shown he really cares about making his customers happy. Stack Optical also has a beautiful new location at 2233 South Monaco Parkway in Denver. Free and easy up-close parking. Stack Optical has an on-site eyeglass production lab. Whether you need office eyewear or a new set of shooting or golf glasses, Stack Optical has the solution with the Stack Sport Pack. Give them a call today and ask for their $69 eye exam, 303-321-1578. That's 303-321-1578. Your eyes and vision are one of the most important things in life. I'm confident at Stack Optical, you'll see the difference. That's 303-321-1578, stackoptical.com.
Rush to Reason with John Rush, weekdays from 3 to 7 on KLZ 560.
We have a few more minutes here on Haystack Help Radio with a special edition of Your Money Matters. Greg Lackey is our guest, the Accelerated Insurance Group. Kurt Rogers in studio from Affordable Interest Mortgage. So, Greg, we hear a lot of one word in the insurance industry, and that's about should I have an umbrella or umbrella policies? Define that for us. What are umbrellas?
Well, an umbrella really kind of fits its description. It's trying to shed rain from you as the person, okay? So think of you as the person as being your auto policy, your homeowner's policy. And you've got certain protection there already built into those two policies. An umbrella is going to sit on top of that. Now, the most important thing there is that your underlying limits match up to where that umbrella kicks in. Most insurance companies are looking for on an underlying at $500,000 in liability limits, and then if you have $1 million umbrella, that million would set on top of that $500,000, so it would give you 1.5. Now, if you only had 300,000, and the umbrella states in their language in their contract that we only go down to 500,000, there would be a gap of 200 there for the insured before that umbrella kicks in.
So you don't have 2550 and then have an umbrella.
Yeah, no.
You get a big liability.
The umbrella is only going to be sold if you meet those limits. And insurance companies are pretty good too they're going to ask all those questions. So
now, cost-wise, when you're adding that kind of insurance, I mean, you would think it's expensive. How much?
Well, again, depending upon the driver, because it's going to get attached to your auto policy. Your home will be underneath there too. But it depends upon tickets. It depends upon a lot of different things. But you can add $1 million, probably anywhere from a couple $100 to a little over $500, $600 a year. Yeah. So it's really pennies on the dollar. Yeah. It's
$10, $15 a month, maybe.
Yeah. I think, and I had this conversation with a client of mine yesterday, and you can't be insurance poor either.
No.
And I think, you look at the teachers that are walking out now, and I empathize with them, because I think what's happened is the cost of everything continues to go up. Their salaries haven't kept with that. And I think that's true in a lot of different industries. As we look at auto rates in Colorado continuing to go up, health insurance continues to go up. And again, even if you're getting that health insurance through an employer, you're probably maybe seeing a little less in your check as a result of that cost being associated. So how do I best protect my assets with a limited budget when it comes to, to my insurance? Because that's really all you're doing is you're trying to protect assets.
Now, we were talking at the break about homeowners insurance. Again, we'll come back to how many people have moved in and the price of homes going up. And we deal with this. You deal with my processor, Heather, all the time on this, about how the home might sell for $400,000, but to rebuild it isn't going to cost that. And the insurance, explain that to the listener.
Yeah, I mean, we'll take a home and, we'll either go to the county assessor's office first and then start asking the homeowner questions also. And, for an example, has the kitchen been redone? Have your bathrooms been redone? just making sure the square footage, when was the last time the roof was replaced? Is the basement finished? What kind of finishings? Is there anything else particular to the home that we should be aware of? And we plug all that information into a cost estimator with each and every insurance company. They're going to spit back what they think that would cost to rebuild that home.
Right.
So, you take homes with the inflation that's going on in Denver right now, and to your example, that home sells, or I bought it for $400,000, but the insurance company says, we think it would only cost $200,000 to rebuild. Okay. Well, does the insured go pay another $200,000
worth of coverage?
For more coverage when the insurance company is only going to probably pay $200,000 in case of a total loss?
Right.
Or how do you deal with that? And we see that quite a bit, obviously, especially with, prices in Denver. And there's ways around it. You can use extended replacement cost. Some companies offer,
125.
Well, 125. Some companies will say, hey, we'll just replace it no matter what the cost is.
Right.
There's options out there to address those issues. And again, we work as a broker. And what that means is we just take the information, we work for you, much like you do in your business. How do we offset some of these costs? And the more, deeper we can get into conversation and so forth, and I can learn more about that client, about what's important, what's not important, we can start finding companies and building policies.
A $400,000 house doesn't mean the house is worth $400,000. It's the house and the land.
Correct.
Because when you look
market,
it's the market on that, because the two have a value. The house might be $250,000, but the land might be $150,000.
Well, yeah. So if let's say that all of a sudden we came in there and there was a total loss, and it cost $200,000 to rebuild that place. The house is probably going to sell for more than $400,000 now.
Right.
Okay. The other thing is too, you have a new roof, you have new appliance, you've got new everything. So the insurance company's going to look at that and go, gosh, this is brand new. Well, we're going to lower our rates here and so forth on that. So, understanding market value and insurance value is that's always a tough thing, especially for, first time home buyers.
Yeah, very much so.
A lot to know, but to tell you, dealing with someone like Greg and being a broker, they're going to ask you questions you may not think about and keep you from making a mistake. So give Greg a call, 303-625-9538. Greg, thank you very much, sir.
Thank you very much, always.
Glad to have you back on the show again.
Kurt, thank you, sir. And most of all, thank you for joining us today for Haystack Help Radio. Be sure and check out our website once again, haystackhelp.com. And our helpline is always open, 303-333-HELP, 303-333-4357. Hope everyone has a great day, and leave it right here on KLZ 560.
The views and opinions expressed on KLZ 560 are those of the speaker and do not necessarily reflect those of Crawford Broadcasting, the station, management, employees, associates, or advertisers. KLZ 560 is a Crawford Broadcasting God and Country station.